Welcome, everyone. We are live, and I'm absolutely thrilled. Everybody's here with us tonight. So, whether you're brand new or a seasoned trader, you've just made a power move by showing up tonight because we're about to dive into what could potentially completely transform the way you trade and grow your income. So, if you are interested in making $500, $1,500 a day, maybe $5,000 a day or more, I'm going to explain to you tonight how exactly to do that. So thanks so much, guys, for being here. My name is Anka Metcalf. I'm a professional independent trader. I focus on day trading and swing trading, stocks and futures. I have over 25 years of trading experience, and I have helped traders just like you beat the market with precision, confidence, and consistency. Tonight, I'm going to pull the curtain on the strategies that I use in the market and that work in today's market, in today's volatile market. And we're going to talk a little bit about stops if that is something that you are guilty of, stopping too early from trades. We're going to talk a little bit about that. All right. So I can't wait to share some trades with you, and we're going to take a look at some live charts tonight. So grab your notepad, silence your distractions, and get ready to level up because for the next 60 minutes, you're going to be present into a powerhouse trading environment. So let's do this. So, um, first of all, I just want to quick sound check. Let me know if you guys can hear me, if you guys can see the screen. I just want to make sure that everybody can see everybody. Okay, can see the slides. You guys can hear me if the sound is okay. Perfect. Sounds fantastic. All right. Good job, everybody. All right. So thanks so much. So tonight is going to be about you becoming a powerhouse trader. What does a powerhouse trader mean? It means you have a consistency of 70% or more. And some of you may say, oh, maybe that's not possible. And I'm here to prove to you that yes, this is possible. I am here to tell you that my win ratio is between 75 and 85%. So let's continue. Also, just want to make sure that everybody in here, in case the pace is too fast, and if you would like to take notes, you can do that, obviously. But this webinar will be recorded, and we will be sending you the recording a little bit later on. So, quick risk disclaimer: all information provided by us is for educational purpose only and should not be construed as investment advice. And I'm pretty sure you guys know by now that trading involves a high level of risk and may not be suitable for all investors because you could lose money. So you should carefully consider your objectives, your level of experience, and your risk appetite before taking a trade. All right, so let's dive deep. This webinar is for you. If you want to trade in sync with institutional money, with institutional moves, with the momentum and trades. This is very important because there are a lot of counter trend traders out there that say, hey, you know what? The market is too high. Let's short it for no reason. When you have a market, when you have an index or a commodity that is into a power trend, nobody gives you the right to short it. I mean, you can do whatever you want, but it's easier to play alongside institutions, funds, portfolio managers. It's easier to go with the trends. So this webinar is also for traders who are ready to eliminate frustration from trading. And I understand sometimes trading is frustrating. Do you know what the most frustrating thing about trading is? Can you give me one example of frustration in trading? I could think of a few. I could think about a few, but I just want to hear your take on this. What frustrates you the most in trading? Name one thing. Stop loss hunting. That's a good one. That's a good one. Okay. But sometimes I have to say, it's frustrating to wait for the trade because sometimes we hurry. We have this feeling that we got to get in a trade right away. As soon as the market opens or as soon as we see a little bit the price fluctuate, we just got to be in that trade. Getting out too early, that is a good one. That is a good one. And we're going to talk a little bit about both, about the stop losses and about getting out too early. You see, today was the FOMC day. I don't trade FOMC days and I don't trade quadruple witch option expirations or any option expirations day. That's what's in my trading plan. It was not always the case. I have started to implement this 2 years ago, and I'm like, you know what? I deserve a little break from the market. I'm just gonna wait, and take a little break on these specific days from the market. It's fine because these days, and especially on quad expiration, you're going to get a yo-yo market because the price action is not very responsive to the catalyst. It's not responsive to support resistance. It doesn't offer good continuation up or down. It's just yo-yoing around. And the same with FOMC. Typically on FOMC days, you're having a very, very, very flat market. Today was something like highly unusual. And you can correct me if I'm wrong. But I'm telling you guys, this was highly unusual to see the market spring like that in the first 30 minutes in the day. Like crazy momentum, right? The first 10 minutes were bam, pulled back. And then for the next 30 minutes, it was like mega rally. And not only that, but it didn't offer you an entry opportunity. It didn't. So there were some traders, some aggressive traders in my trading room that said, you know what? We're just going to get in. We're just going to get in. And they got in very early on because they know from me, I trade the power hour, and they know from me that if we don't get an aggressive entry right at the beginning of the day, 9:35, 9:45, I would say almost the latest, at the latest, it's very hard to have really strong momentum that may continue until 11 o'clock. So that's why it's not that we're in a rush to take a trade, is that they are setting up that time with the strategies that I trade. They're setting up around that time. And then we were talking about trailing because they said, okay, can you help us out? And I'm like, of course. Okay, of course. I'm not in any trade, so I think I'm going to do it much better now because I don't have money in the game. And one of the traders and a group of traders were in YM and another group of traders were in ES because we talked about these indices and the pre-market game plan, and they were shaping out being better trades than NASDAQ or Russell. So one of the traders said, okay, is it time to exit? And I'm like, no, we don't decide the exit. Okay. And CJ, that is about, getting out too early. Okay. So you got to stay in the trade as long as the momentum is strong. And I know like a lot of traders are going to tell you this, or educators out there are going to tell you stay in the trade. Okay. So stay in the trade until the momentum fades out. But how do you know when the momentum fades out? Okay. So I'm going to share some charts a little bit in in a few moments, but you stay in the trade until a reversal occurs. Okay. So this is what they don't tell you. So CJ, you could write this down. For example, based on the setup that you've entered, you probably have looked at a specific time frame. Can I ask you, what is your preferred time frame? So I can tailor your answer to that. Perfect. Mine too. Okay. So if you enter a trade based on the 5 minute, you're having your entry based on 5 minute, you're having your stop based on 5 minute, your trailing should be on the 5 minute. So that means what they don't tell you, what 99.9% of the educators don't tell you, is that the momentum starts fading when the market is doing a reversal. So how does a reversal look? Okay, so I'm just gonna grab here my pen and I'm just gonna jot down here some candles. Okay, so this is the momentum. So you're in this trade and the price action is running. Let's say here you have a target and you go like, if it gets to this target, I'm super happy. There's nothing wrong with you taking partial profits into a target. Okay, there's nothing wrong with taking partial profits, but don't take everything out because that means that you're exiting the trade too early, meaning you're not waiting for a reversal to happen. And remember, this is your 5 minute. Your stop was based on a 5 minute, right? Let's say your entry was based on a 5 minute, and this is your continuation. This is your target. Even if it was your last target, just stay in this area. Okay, just stay in this area right here. So take partial profits. And then what if this happens? Okay, and you go like, oh my God, I just got out here where I could have stayed a little bit longer. Okay, so now the one thing that you can watch for, and again, I tell my traders in the room, we have to trade every single move that we do, it has to be a no-brainer, like literally brain dead. Okay. So what you need to do is to stock for a reversal. And at one point you could get like a skinny doji like this, right? You could get like a skinny doji. That is a pretty good indication of momentum fading. Okay. Where if you have a red candle that is taking the low of the doji, okay, this is your exit. So the market dictates your exit. Oh my goodness. I don't know. It's so cloudy here as well, Alula. It's like I feel so tired as well. Okay, so here it is. This is your exit, CJ. Okay, so this is your exit. So this way, you do not leave money on the table and you do not exit too early. Does that make sense? Okay, does that make sense? So when you see a reverse, sometimes you can see, like, let's say this is a green candle here, so it just has a continuation. Also, look at the size of the candle because usually when the price action is exhausted, there are three things that are happening. Number one, the candles are smaller. The price is extended from the moving average that you're using. Typically, a lot of traders are using either the 20 simple moving average or the 21 simple moving average or the 10 exponential moving average or the 8 simple moving average or even the 5 exponential. So when it's getting extended from those specific moving averages, remember that these moving averages are like magnets. They're going to pull the price right back into them. Okay. And number three, look for volume, simple volume going down because typically after a move like this, there's going to be some exhaustion into the volume. So when you see that, when the trade usually initiates, you're going to see really high volume and the volume is going to, be pretty constant. And then you're going to see smaller candles, smaller size candles, and the volume is going to go lower. So that means that you can see here like a little trend line. Okay, so when that's happening, and let's put a moving average here. Okay, so let's say the moving average is, let's say it's a little bit more extended. So there's a bubble of air between where the price is at and let's say the moving average. Okay, so these are three things that are very, very easy to remember and that are going to help you a lot and everybody in here, and you can apply them on any time frame. I just asked CJ what time frame, he is trading on because, this is one of the things that he hates, getting out too early. So this way you don't decide when to exit the trade. Okay. So this is, yes, exactly. It's a very simple strategy that does a lot for trading. Okay. That does a lot for trading. And the other thing, and I think, Stephen has a good point here. One of the frustrating things I think is, because we started from this, is stop hunting. Do you guys know why stop hunting is happening? Okay. So institutions, just like our brokers, are selling our data, to institutional traders. And a very long time ago, I think maybe 20 years ago, if you look up, if you look up on YouTube, there is an interview with Jim Cramer when he was working for a very big hedge fund. And he was talking about the strategies that they're applying right at the open. they were trading futures. Okay. So at the open, they would force sell. So for example, you would see the price. Okay, so let's do this here. So you would see the price, it was probably grinding up a little bit, and then it was basing and just getting ready for the open, right? And it was going a little bit up and down and, moving all around. And then at one point, if institutions see that there is a higher target, or there are two or three other targets that they want to push the price in, what they do is they create the forced sell. So what they do is, in this uptrend, they short massively. They know how many contracts are in this move. They know the number of contracts, and what they do is they take let's say if there are, I don't know, let's say 200,000 contracts here, okay? They short 200,000 contracts. So what they do is they make all these traders stop out, blimp, and then guess what happens? They are their own buyers, so they sell and they flip immediately. So in this case, you don't stand a chance. Okay. Okay, this is called a forced sell action and forced buy action into target. Okay, so this is why you're seeing, and these are quite frequent. They happen at the open. We're gonna look at some charts, like I said, in a few moments, but you actually saw them today because they actually fluctuated a lot to the downside and they were being bought. Okay, and you saw how the price action ran like wildfire. Financials were definitely on fire today. JP Morgan, Goldman Sachs. It was very unusual to see financials rally like that into an FOMC meeting. Okay. All right. And rate decision. Okay. So I hope this helped. It was not part of the program, but I'm really happy, to tailor the presentation towards the questions that I'm getting in the room. Is that executed by coding? No, they absolutely do it manually. They do it manually at their trading desks, okay? Because when there's algorithmic trading is pretty organized. So they buy on support, or they have separate indicators that they use. They have patterns, price action patterns, etc., that they act on. But those forced sells, or they could possibly program algos. They could probably do that as well. All right. So if you want to trade with clarity and stress-free, this webinar is for you. If you're ready to become consistent and eliminate noise, again, this webinar is for you. And if you're ready to learn the methodology that works in any market and any asset, this information is for you. And by the way, everything that we discussed today could be applied on anything that you're trading, from crypto to stocks to anything. Okay, so if you want to trade your way to financial independence, you got to get started, right? But how do you get started? Okay, how do you get started? First of all, you got to invest in yourself, because you have to learn this high income skill. It is a high income skill, and it is your duty, because if you want to trade like a pro, you need to learn how to trade like a pro. And first of all, you have to start somewhere, because everybody's telling you, and there's this new fade, on social media. It's like, oh, you got to start investing. You can invest with $5. You're not going to get anywhere with $5. You're not going to get anywhere with $50. You're really pretty much not going to go anywhere with $100. It's just playing around. First of all, you got to create the income. If you have another source of income, and then if you decide to be a trader as well, this is the best scenario. Okay. What I did is I quit my job, and I had an emergency fund that would cover me for about a year and a half. And I gave it a go. I never looked back, but I was so determined to make it work, because I didn't want to do anything else. And it worked for me. And also, you have to allocate the extra income to swing trading and to invest for wealth. So once you start generating income, and to me, what I did is I started generating income. I was still swing trading at that time, but I wasn't very active in swing trading, because I wanted to learn this income skill so I can generate more income so I can allocate to my swing trading because I took a little bit from my swing trading account to have that emergency fund going. Okay. So it was not freakish, but it was pretty freaky at the time. But again, that aside, I don't look like when I look back, I'm thinking like, why didn't I do this sooner? Okay. So that was my only regret. Why didn't I do this sooner? When I started trading, when I quit my job, literally I knew how to trade. I had 3 trading courses that I attended and I was in mentoring at that moment. So I had 1 year of mentoring afterwards, day in, day out. I had information that was drilled in my head and I was very fortunate to have an institutional trader as my mentor. He's still there. He's almost retiring, but he's still there. He's still at Goldman Sachs. So I learned a lot from him, and this is the method that they use for their trading, whether they're swing trading or day trading. They use it for stocks specifically. I have adapted it for futures. Okay. And then of course it's just a matter of rinse and repeat until your account grows. So because once you generate income and once you have that income, you're going to be able to pay your bills, go on vacation, do whatever you want with that extra income, but then set aside an amount for swing trading and for investing. I like to keep my accounts separate. I have a day trading account. I have a separate swing trading account. I have a separate investing account. And I highly recommend everybody in here to have separate accounts because when you put your day trading hat on, you don't want to log into an account where you have some long-term stocks in it. And, you're going to see your P&L fluctuate. And, it gives you, you have certain emotions when you're looking at your P&L anyways, right? So it's a really good idea to have things separated. So what do I mean by investing in yourself? First of all, you got to invest not only in your education, but invest in a fast internet because if you want to day trade, and again, this is not valid for swing trading. If you want to start day trading, you need a really fast internet because you can't trade at a Starbucks on Wi-Fi. And I'm pretty sure that you have noticed that if you're on Wi-Fi, your order doesn't really go right away. And you may have, especially if you have a market order, you're going to get a pretty bad price, right? Especially in the futures market. So if you have a fast internet, hook it directly to your internet, have it hardwired. It is preferable to do it like that. I have it like that. I have my trading desk. I'm sorry to say that I cannot day trade from the beach. I can't. This is something that you can't do from the beach. You can put in an order when you're on the go, when you're shopping, when you're on the beach, at the beach, when you're having drinks with your friends. You can place orders that way if you're doing an investment, if you buy it for long term, or if you do a swing, but not for day trading. Day trading is a little bit different. It's a little bit tedious, but it's really rewarding for those of us that want to generate income from. Of course, invest in a good trading computer because it truly, truly matters. Real estate, and having the proper real estate can make a difference between a good trade and a bad trade. I would say that 3 monitors are plenty for day trading. I actually have 4 monitors. I'm in my Michigan house right now. In Florida, I have 5 monitors, plus a laptop where I have my scanner. I'm running my scanner separate because I don't want to, take all the energy from my computer. And sometimes, things can happen. So I don't want to interfere with anything. Okay. All right. So bottom line is that you have to invest in these things because this is your business and you have, I mean, think about this. This is not a business where you're going to have employees, where you're going to run payrolls. It's not that tedious. It's about really fun stuff, investing in a really nice, cool computer, investing in your education, investing in, I don't know, something really cool, right? And by the way, all these are deductible. So when you talk to your accountant, because it's for you, right? It's for yourself, it's for your business. And I highly recommend to have trading as a business. So incorporate an LLC. Okay, so it's your personal LLC. So you can deduct everything. You can deduct the internet, you can deduct your cell phone, you can deduct your computers, your Did I say internet? Yeah, internet, phone, etc. Because you're using your phone to place orders, maybe, right? Trading platforms, if you have to pay for data, if you're using a scanner or whatever you're doing, you can deduct all these. So talk to your accountant about that. I highly recommend that. That's the way I have them set up in myself. Education is power, and you only need to learn it once, and then it's like fine wine. You're just going to get, better and better and better at it, because investing in yourself is an investment in your future. You will get the best returns on your investment in the future when you will be harvesting the benefits. What are the benefits here? Profits, right? The income as a result of you making an effort today. So that's the effort. I consider myself, I was like so happy when I ordered my first trading computer. I'm like, yes, okay, so cool. Because I've never had more than one monitor. And all of a sudden I had four monitors, and I'm like, wow, this is outstanding, right? This is really great. And I'm going to show you why this is so cool in a few moments. So strive to be better every day. So this is, like in trading, you have to strive to be better and never be like, disappointed if you lost in a trade today. It's not the end of the world. Okay. And once you know how to lose, because a lot of traders, and a lot of educators may tell you, oh, you got to first learn how to lose. What they refer to is basically losing just your allocated risk amount per trade. That should not be devastating, because a loss should be just a little losing trade in an ocean of phenomenal trades. So when we're talking about R, the R is your risk unit. Okay. So your risk unit is determined by your account size and your risk percentage risk per trade. I risk 1% for when I'm day trading. I risk 1%. When I'm swing trading futures and day trading futures, it's still 1%. When I'm trading stocks, I trade 3%. I'm a lot more aggressive, 3% to 5%. But that is a totally different can of worms. Okay. All right. So markets will remain volatile. And in fact, in the invitation that I sent you guys, I also mentioned volatility, and not to fear volatility and start capitalizing on it. And we're going to go through some charts soon. So why the markets will remain volatile through 2025. Sorry, there's a typo here. So the markets will remain super volatile because we have the Russia-Ukraine saga. We had the Israel-Hamas war in Gaza. Now we have the Israel-Iran war, which is kind of like worse than the Hamas war. Okay. Will FOMC ever cut rates, and when? We had the FOMC meeting today. Powell left the rates unchanged. Inflation is still high. I mean, inflation has not gone down. I mean, go to the grocery store. We don't need the numbers that are coming out. We just see it ourselves, right? At the grocery store. Just go get gas. Gas is not cheap. Go get groceries. Groceries are not cheap, right? So inflation is still high. We still have massive layoffs. I mean, if you're looking in the news every single day, there is a company that is cutting employees. And then, of course, the tariff wars, right? Which is creating a roller coaster for the market. Now, a lot of times traders may say, hey, you know what? I am just going to sit in cash until this is all over. Well, if you sit in cash until this is all over, you may be missing out on some of the best trades. And you're going to be missing out on a lot of opportunities because, for example, commodities are not always very active. And in fact, a commodity like oil is not very active and has not been active for a really, really long time. Gold, again, until last year, it was literally almost crapiola. It was nothing going on with gold until it woke up. And then we took advantage of it into the third quarter of last year. This year, we have been riding gold like crazy, silver like crazy. We are in a trade in copper as well. So there are other things that are moving this year that haven't been moving in a really long time. So when it comes to trading and starting making a lot of money and starting, just generating income and generating wealth, because when we're trading, we're not only day trading, we're also looking for swing trades, right? This is what completes a trade at this whole spectrum: day trading, swing trading, and investing. We're not going to talk about investing because we're not investing here because we want results fast, right? And we want like really good results fast. So all we have to do is, I think one of the hardest things that a trader has to do, and we're going back to that frustrations. What is my frustration, or what is a lot of traders' frustration? That you have to sit on your hands, especially when you're swing trading, until the opportunity is there. And for example, in oil, you have to sit on your hands for months and months and months and months. If you looked at a chart in platinum, and if you're like to trade platinum, you have to sit on your hands for about 4 or 5 years. And finally, you're getting the breakout now. So these are opportunities that come into the market, but they're not coming every day. So you have to stop them because you really don't know when they're coming. Also, position sizing is very important because you have to determine how many contracts you're going to get with your allocator risk size. And this is so important based on that 1% that you're risking into the market. So let's say you're risking $1,000 per trade. So that means that if you're allocating, let's say 5 trades in a day, that's a total of $5,000 on a day. Can you stomach that? And if your risk tolerance says no, then you shouldn't. And you should go down in size and say, hey, I can only stomach a loss of 3,000 or 1,000 in a day. And then you divide, for example, that 3,000 into, let's say your risk is 3,000 now instead of 5,000. And you go and say, hey, I'm only going to risk 3 trades, and I'm going to risk 1,000 on each trade. Or I'm going to take 6 trades, and each trade is going to be $500. And you have to see how many contracts can I fit into that $500, because the difference between the entry and the stop is going to vary on each and every single trade. There's no such thing as having a standard risk and say, hey, I'm going to get an S&P because I've heard this stupidity before. It's like, I'm going to jump into S&P. I'm going to give it 5-point stop. You're going to lose on 95, 99% of the trades. That is just being nice, because that's what's going to happen. But the reality is that the difference between the entry and the stop, and I'm going to show you some examples. Like I said, we're going to get to charts. Okay. The difference between the entry and the stop varies from trade to trade, from day to day. Sometimes you're going to have an 100-point stop in the Dow. Sometimes you're going to have 50-point stop in the Dow. Sometimes you're going to have, let's say, 35-point stop in the Dow. So you're seeing that if you would apply this with only one contract, your performance is going to be all over the place, right? Because what if take 3 trades, let's say with a 100-point stop, and you're using that one contract, okay? And then you're going to have, let's say you lose on all these trades, okay? So therefore, you're going to have like a big loss, right? Because 100 points in Dow is a lot, or even in NASDAQ. But what if you're going to have like a 25-point stop, and you take the same amount of contracts? Okay. So what if those specific contracts that are going to start making more money for you? Okay. So yeah, if I have enough time tonight, I will show you a bit of an example, because I hear a lot of traders that are having difficulty with consistency. And this is only for futures traders. Stock traders learn, they know their lesson. Okay. So they know how to position size. Futures traders don't. And brokers are taking advantage of this because they allow traders to open accounts with $5,000, with $100, with $500. And all they do is they keep on bringing more money, more money, more money. For whom? For them. Because you can't really make money with $500 if you open an account with $500. Okay. And money management, again, is very important, and have a trailing strategy. And I'm really happy that somebody brought it here, that, sometimes you're, leaving money on the table, getting out too soon. And that is because you don't have a proper trailing strategy. So often traders think that all they need is a trading strategy to make money in trading. And yes, you can make money in trading with having a great strategy. However, if you want to make serious money, like more than $100,000 a year in trading, then you need a proven system because the strategy is not going to bring you anything. You need position sizing, you need money management, you need a lot more, okay, than just a strategy. You need a whole system. So you need those wheels to turn in sync. So in this webinar, you'll learn how to process, learn the process, how to get started to your first 100K in trading profits. And even if you don't have a lot of money in your trading account, there are so many prop firms out there that where you can get I was going to say financing, that where you could get funded to trade their money in return for a really little return. Okay. So by having a proven system, traders will eliminate any doubt and confusion. Guys, newsflash, trading should be boring. It should not be exciting. If you're doing something really exciting in trading, okay, you're doing it all wrong. It has to be really boring. You know, like waiting for the trade, waiting for the trigger, right? Analyzing the trade. So they will know exactly what to do and when. So this is very important because when you look at a chart, you're going to say, oh, if the price goes at this point, then this is going to be my entry. And at the time of the trigger, let's say this is going to be my stop because it will be a pivot. It will create a pivot. And then you will know in advance what targets you're going to look like achieving. Exactly, Chris. And I love the weekly charts. I love the weekly charts, and I agree with you. Okay. So, blueprint, right? So, think about a blueprint, right? So, when a blueprint, basically, architects build these blueprints, they design these blueprints because the blueprint is basically your framework of how your trade should be like, right? So you have to know exactly where you want your entry, where you want your stop, where you want your target, how you're going to be trailing, what risk you're going to be using. The same way architects use a blueprint. They want to know where are they going to put a door, a window, I don't know, something, right? A sink or a refrigerator. They need that framework. So that's why you need to have a really good trading plan. And I'm not here to tell you, just like another person out there, that, hey, you need to have a trading plan. No, you need to have a very simple trading plan as to, number one, what is my risk size? And that little piece of paper should be in front of you for at least 2 years until you get the stereotype. Okay. It has to be mechanical and it has to be easy, because if it's not easy, it's not doable. Okay. And by the way, guys, after so many years of trading experience, and I remember when I first started trading, I was overwhelmed with everything. Overwhelmed with everything, with the price action, with the indicators, with position sizing, with my order entry, with everything, with commissions, because I was paying so many commissions when I got started. And I never really thought that I need a written trading plan, and I was all over the place. When I started day trading, I was day trading stocks, and I was like, man, I need to, like, I've got this. I don't need something written on a piece of paper because I have it all in my head. And I was so wrong, because you have that reassurance in front of you of the pattern that you need to trade, right? You're going to need to just, literally have it have it as simple as just trading one strategy. Okay, just dumb it down to only one strategy until that strategy is so flawlessly implemented that you're going to switch to the next strategy. Okay, and risk management is very, very important. So volatility is high and will remain high through 2025. Absolutely. We talked about the wars. We talked about all the conflicts. We talked about all the crazy, all the terrorists, all the stuff that is going on. It's overwhelming. I am actually deeply shocked of how the market is holding so well. Like seriously. All right. So, some of the most important parts of trading are rarely discussed. Okay, like confidence, and I think these are very important to understand before we actually look at charts. Because when you think about confidence, because when you know how to trade, you have confidence. People that don't, and traders that don't have confidence, and they think that I'm fearful of putting an order is because they don't know if that order or if that trade is right on. Okay. They don't know whether it's in a trend because if you take trades in a trend, if you look for pullbacks or if you look for breakouts or whatever the, game plan is, you're going to have that confidence to take the trade because you've built on that, history, right? You have trades, you have took some trades and you have some trades under your belt that literally produced for you. So you remember a successful trade. Trading is about photographic memory. And you remember trades that worked for you and patterns that worked for you and patterns that did not work for you. So confidence is repeating the system that worked for you. You don't have to do something out of the ordinary. Just do something that works for you. And then having conviction. Conviction also comes from education. Patience. You have to have patience to wait for the trade. Again, it's that frustrating part that a lot of times you have to be sitting on your hands. Most of the time, 90% of the time, you're going to be sitting on your hands, 10% execution. Mental toughness. Why do we need mental toughness? Because if you're using 1R on each trade, meaning you're 1%, even if you have a bad day and let's say you have, let's say, 4 losing trades in a row, that is not going to damage your account in any way, shape, or form because that's only 4% of 100 that you have in your account. And it's very hard. And I was having this discussion with some of my traders a couple of days ago. It's really very hard and it's impossible like to have like, I don't know, 13 trading days, losing trading days in a row. It's literally impossible. If you know what you're doing, it is impossible. And then discipline. Discipline means having, the patience, the conviction, the confidence to wait for the trade, to have the proper entry stop. For example, I look at the trade and I determine where I want my stop. I determine where I want my target and I use limit orders to enter. All of my trades are limit orders. I know exactly. So I don't just jump into the trade. And then education. Education is so important, right? I don't care where you're getting your education, but you need strong technical analysis skills. You need pattern skills. You need, skills with indicators, etc. And then you need preparation, right? And you need to prepare for the day. You need to have a routine and how you start the routine. So I will answer all the questions, guys. I know you guys have been posting questions. I'll answer all the questions at the end. So all of these factors represent 90% of the battle. And you see here that basically I haven't mentioned strategy, charts, management in here, right? So this is 90% of the battle. And if you understand the position size, if you understand the how to manage a trade, because we teach our traders how to manage trades. I do this every single day in the trading room. It is very important to know not to leave money on the table, but also if you hit the stop loss, just get out. Throw the bad apples away. You don't need them. Do not stay in a losing trade. If you have a stop, the stop is the stop. The stop is your limit. That's it. And if it hits your stop, you're out. And you're going to feel so relieved once you're out and it turns against you instead of sitting in that losing trade. And by the way, I have sat through some really bad trades and I didn't take my stops. And I know the gut feeling that you have and the prayers that you make. It's like, oh God, please, just this once, make it go up or make it go down or whatever. I'm not going to do this stupid thing again. Am I right? Like, how many times did this happen to you guys? Just curious. I know. That's right, Denise. Exactly. All right. And it's not fun. So regarding of your trading, uh it happens to everybody. It happens to everybody. And I would lie if I would say, I took my stop every single time. Oh yes, I am the best. I really no, of course you don't. Of course you don't. You will learn from your mistakes. You're going to make mistakes. But the most important thing is that your mistakes should not be costly. That's why you're 1%. Okay? You're 1%. So, regardless of your trading philosophy, if your head's not right, you won't be successful. Seriously. Okay? All right. So, let's get back on track with generating income, right? 500 to 5,000 depending on, and I'm going to show you my stats. Okay, the stats that we have in the trading room, which are official. These are all the trades that I call in the trading room. And you're going to be able to see the kind of moves that we generate in the market, the kind of profits that we generate in the market. I think that one of the most important things is to be in sync with the institutional money flow. Um, Focus on high velocity moves, on high rewards based on your patterns, and based on, some winning patterns that you have learned through time or that are taught to you. I like to trade from 9:30 to about 11:30. I try to be done every day around 11 to 11:15 because from that point on the momentum really fades out. Typically it's 1 to 2 hours and done, but that doesn't mean that I'm going to be in the market for 1 to 2 hours. I'm probably in a trade on an average no more than 10 minutes. That's my work day. I focus on 4 charts on the indices for day trading. Okay, so I think that gold is not quite there yet for day trading. Gold is a little bit more volatile, silver as well. Commodities in general are a little bit more volatile for day trading. They're really great swing trading material. Deploy precise strategies at specific times and locations. Apply simplified management, like I've literally mentioned before when I did that little drawing for you guys with the reversal, not to leave money on the table. And basically, everybody gets into trading because of the unlimited income potential. And trust me, there is a market out there that you can trade. Okay. Now, remember this, there is no average in trading, because if you're average in trading, it means that you're losing in trading, or best case scenario, you're averaging in trading. But if you're average in trading, it means that you're kind of like break even, right? You're a break even trader, but you're getting chewed up by commissions. In trading, you're either great or you're a loser. It's simple as that. So I like to trade the indices. These are the indices that I trade. I trade the Dow, the S&P, NASDAQ, and Russell. I watch all four every single day. I look for a synchronicity between them. I look at sectors, each sector that is under the Dow, the S&P, NASDAQ, and Russell. I look at the stocks under each index. I have some screens with stocks from each of these indices with the major players to see what's moving, what's lagging. I trade crude oil. I don't trade I haven't traded, I have to say, RBOB gasoline or Brent oil in a really long time. Heating oil is very thin. I like to trade natural gas. I like to trade also gold, silver. I'm not really great with platinum, but platinum had a really massive run. You could see it today, and it was on fire. It finally broke out of a massive multi-year base. Sometimes soybeans, soybean meal, soybean oil, corn, wheat. These five right here, commodities, I like to trade at times when they're setting up. Again, you have to have like a lot of patience with these. And that's pretty much it. I really don't trade currencies or Bitcoin. Okay. So this is pretty much what I trade, because trading is a rule-based system. It's about finding highest trades, waiting for a setup, fine and precise execution and having really good management skills. And of course, mindset that I mentioned before. And why futures? Because a lot of you guys may say, why are you talking about futures? Okay, because futures are not, and at least some time back, were not very popular, especially when I got into futures more seriously from the day trading perspective, like 10 years ago. They weren't very popular, I have to say. There were very few traders that were trading futures, very few traders. And the traders that were trading futures and were getting into futures were getting into futures because they didn't have the 25K to start day trading stocks. Okay. And at that time, and a while ago, there weren't many prop firms that were funding you with capital to trade stocks. So that's why people saw futures trading as an alternative, but they don't know that it's a little bit more complex than trading stocks. And there are some things, even though they may look very similar in terms of pattern, sometimes they are a little bit wilder than stocks. But people are driven to them because of the advantage of the buying power. They have really great volume, especially for the New York trading session. I don't trade Asian session. I don't trade a London session. I focus all my trades, whether swing trades in futures or day trades in futures, in the first hour. Done. That's it. So I don't like to look at charts at 1 p.m., 3 p.m., 4 p.m., 7 p.m., 10 p.m. The other thing is that you're trading major markets. You're trading NASDAQ, the S&P, etc. It's great for income and wealth. You could day trade and swing trade. Tick values, different price ranges. You have minis and micros available. So if you have a smaller account, you can position size either to a mini or a micro. You don't need a scanner because you're basically trading for indices. And if you're like me, my trading universe for day trading into the first hour is relatively small, consists only of 4 charts. You don't need any special indicators. You don't need to buy any mumbo jumbo indicators. Everything that is offered with any broker is great. You have great tax advantages. If you didn't know that, this is the number one reason why I came to the futures market. You don't get any pump and dump because guess what? Nobody's pumping and dumping. Nobody can pump and dump the S&P 500. It's safe from rumors. You can't downgrade or upgrade NASDAQ or Russell. And, because of that, they're not so easy to manipulate. So they're a little bit more robust. It's just like when you're investing in one of those, in a fund, you know what I mean? And that fund is, it has a composition of different stocks within different sectors, and it's going to have like a really solid, positioning into the market. It's just like that. And what I like about it is that it has 24 hours trading, so it's hands-on risk. So if I pull a chart right now, it's 8 o'clock or 10 to 8. I could actually look at some charts, right? And of course, you don't need the minimum of $25,000. You can open an account with $5,000. And here's the advantage that I really like, and then we're going to dive into some charts now. One of the things that I really like is that if you look at the Qs and if you look at the, let's say at NASDAQ, based on the similarity of the patterns, you can make more money trading NASDAQ with less money than you are trading the Qs. Okay. So basically, if you're trading the Qs and say hypothetically they're priced at $550, you need about $25,000 in buying power to buy 100 shares. And if the price goes up 50 cents, you're making $50. But if you want to buy NASDAQ, okay, let's say the price is at 20,800, okay, hypothetically. And if you want to buy one contract, that's about $33,000. And if the price goes up 50 points, then you make $1,000. Yeah, that's right. So instead of $50 for the same amount of time spent in the market, okay, same amount of time. So I'm going to show you here very quickly. These are the Qs. This is on the right-hand side at the bottom is the buying power in effect. And you can see here that there's a shallow pullback and a reversal quickly. Okay. So we're going to talk about some of the chart similarities and what indicators that I use in a few moments when I'm going to be sharing some live charts. But here's the buy, here's the stop, and this is the move. Okay, this is the move. It's fine if you take it at the first sign of reversal. It's fine if you keep it, but if you keep, for example, this is on this image is on a 5 minute. We were actually trading this on a 30 minute, and basically we were pivot trailing it here. So this was the stop. Okay, right here. So you can see that as it was going into the end of the day, this was just a test that we did with some traders and a coaching. Okay, so this is very, very cool. So by the way, everything that you guys see here, this move from the entry to, let's say, the end of the day, generated $303, which is pretty cool, right? $303 is awesome. All right. So number two is NASDAQ futures, right? NASDAQ futures is really great. Okay. Let's see here. Hold on just 1 second. Just give me 1 second, please. Okay, because my computer is going crazy. All right. All right, sorry about that. Okay. All right. So here we have NASDAQ. For the same move, you can see here that we have the same technical pattern and we have the same close, strong close into the day. So for the same time, less buying power, we were able to generate $2,400, a little bit more than $2,400. Okay, so here's the cues again. See, my computer is just acting weird. Okay, so here's the cues, $303. Here's NASDAQ, $2,400. So I don't know about you, but in my book, I would much rather go home with $2,500 versus $300 for the time spent in the market. What do you guys think? Would you rather sit in the market for 30 minutes or 3 hours? It doesn't matter, right? So let's say you're in the market, you're in a trade for 3 hours. Would you rather walk away for $300 or for $2,500? Okay. So this is why I got sold on this. Okay. Here's micro NASDAQ. Say, oh, okay, but you were talking about the full size contract. I have a small account. I have a, let's say, $20,000 account, and I don't think I'm going to get there. And I'm here to tell you that the same move, you're getting the same charts, entry to the end of the day, right here. And it depends. Like, you can get it from here to here. And the first sign of reversal, you're out, just like we discussed today. Okay. So here it is. And you can re-enter here, by the way, as a breakout. This is your entry. This is your stop right here. You can have two trades. Okay. You could actually make a little bit more than this. But this is almost $250 on a buying power of $1,700. This is insane. This is insane, guys. Right? Look at the buying power and look at the return. This is the SPY. This is the entry. You can see the entry here, the stop here. So from here to here into the day, $262, which is good. But how about if you're trading the S&P? And by the way, here is 3,600. We were already in a trade. This is what I mean. Like, you can't. So this was because we were already having some trades active in day trading, but I didn't have another account to take them in. I took them in my swing trading account. Okay, and you can see here that it's, kind of like altering everything. But anyways, this is here per contract. This is only one contract right here at 3,600. And wait, there's more. I mean, micro S&P, that's $127. Okay, same pattern from entry to finish. Okay, so think about this, $500 a day. And I'm not saying that you're going to make $500 every single day, because if you want that, you could get a full-time job. You could go to Costco, get a job there. They have, by the way, they have really great benefits at Costco. I just met someone that works at Costco. Wow. Anyways, so average $500 a day, that's $2,500 a week. $2,500 a week, that's $10,000 in a month. $10,000 in a month, that's $120,000 in a year. Okay, I want to just show you something from the stats from our trading room. And by the way, this is not with position sizing. With position sizing, this would be 5 to 10x more. Okay, this is January. This is one contract, 30,000. This is February. And again, this is a tracker. Okay, with position sizing, this was ballistic. Why? Because we had another trade in here. We had copper in here. And what else did we have? So we had natural gas, this natural gas, $2,000 here. And we have copper here, $12,000. These are swings, two swings. Okay, two swings. Look at this, two swings. Just put us out there. This is March. Okay, this is March, 8,000 right here. And by the way, these are per contract, per contract. Okay. And this is April. This is April. Look at this. You know why we got here? And I told everybody in my trading room, like I could literally quit right now and go to Bora Bora. I would be fine. Okay. But I have other traders that need help. So I'm here to help. But honest to God, I could go to Bora Bora for the rest of the year. Like, I don't need to be here. Okay. I don't need to trade. This trade in gold right here. Look at gold trade. And this is just per contract. Just per contract. Altogether, I had about 8 contracts in gold. Okay. So this is times 8. This is times 8. Okay. All right. This is May. I'm not going to bore you. You can see here we still have active swings in copper. We have silver that already traded 34, 35, 36, 37, right? Already achieved 3 targets. We're looking for 40 bucks. This is a little bit longer term. You can see here we had some swings and Qs and NASDAQ. Look at NASDAQ here. Over 500 points up. Qs as well, right? And this is June, right? You can see that our latest swings are in oil. Looks like those trades were after 11:30 cutoff. Steve, all the trades are called in the trading room between 9:30 and 11:30. That's it. Officially called, typed in on the mic, recorded. Okay? I am not talking to anybody after 11:30. I'm gone. I'm at the beach. You can find me at the beach. We have limit orders. We have limit orders where we have limit orders that we put in the market. Okay. So if I'm going to show you an example because I have an alert in gold because I'm stocking gold again. I'm going to share the trade with you guys. And I have a limit order to buy gold at a certain price. We're going to show you the price. Okay. But this trade was called on Monday. And it's Wednesday right now. Okay. And it's Wednesday. And I don't care where, if it gets filled or not. If it breaks the area where I have where I would like to place my stop, then I'm going to be canceling the trade and I'm going to wait for it to reassess. Do you win every month? I haven't lost on any month. So yes, I win every single month. And by the way, if you go to our website, which is TradeOutLoud.com, and if you go under services, okay, this is the live trading room. This is for futures, and you scroll down, you scroll all the way down, you go down, 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 view futures trading performance. All right, you just click here. Look at the bottom right here. We have 2025 all the way to 2017. We started tracking in 2017, right? I started the futures program because it was such high demand to create and generate income. That was created in 2017. But I haven't tracked my trades. And you know how people are and traders are. It's like, I want to see your stats. Okay. Like 99% of the traders out there that are teaching and, you know, hosting this Discord rooms and all that crap out there, they don't have a stat. They don't show a statement. They don't show anything. Okay. You can see, like, for example, 2024, if you go to the right-hand side, you can see here, like, this is from my personal P&L. So you can see here, for example, at $6,400. And remember what I told you guys, you can actually 5x, 3x, or depending on the R that you're using. This is not per R, this is per contract. I don't recommend anybody in here. If you have like an ounce of brain, you do not trade with one contract per trade or a standard contract according to your according to your personal preference. You position size. When you position size, instead of $6,400, you're going to get $62,000. That's 10x. So for example, in February, instead of making $7,000, you're making $31,000. That is if you position size. My R is $5,000 and I risk $5,000 on each and every single trade. And I position size for that. And for example, for March, instead of making $2,400, you're going to make $39,000. Okay. For example, here in April, instead of minus 2,000, which is per contract, you're going to be positive $18,000. That's the power of position sizing. Here in May, instead of making $30,000, this is your account size, $168,000. So when you see here in the performance, for example, $37,000, the reality is if you position size is over $215,000 that month right here. Okay. So that's what position sizing is doing for you. We teach this in our class and we discuss this every single day in the trading room. Okay. Every single day in the trading room. So learn before you dive in. I'm going to get to charts in a second. Okay. You're going to learn to trade with the big charts because the big charts are the institutions. And it's very important to understand who are you trading with or against. You should never trade against hedge funds, institutions, portfolio managers, big prop trading companies, market makers, hedgers, algos. And the next time when you jump in a trade, think about this. 10% of the traders make money from the 90% of the traders. Because if trading was easy as, reading a book, and I agree, like books are fine. Can you believe me that I only probably read like 3 trading books in my life? And I found those like totally unuseful, like literally garbage, literally. And they were like the holy grails, holy grails. I'm telling you, you have to have like a really good mentor. You have to have like a winning strategy. You got to learn that winning strategy. And I was very fortunate to learn that. I did not open a trading account until I was ready to trade. And I had 3 trading courses and I was in ongoing mentorship. So, can anybody make money in trading? Absolutely. Absolutely. It's all a matter of knowing what you need to do. But if you don't know what to do, and if you're frustrating, FOMOing around, don't have a structured approach, you're not going to make money in the market because trading is not for everybody. But we turn risk into profits, but you need to be willing to put in the risk. Okay. Oops. Sorry about that. I'm telling you, my computer has gone crazy. Okay. Has gone crazy. I don't know where. Okay. So I don't know what it's doing. Okay. Here it goes. All right. So in trading, you should only have 4 outcomes. And I do apologize for that. I was telling you that my computer is wild. Only have 4 outcomes. You either have big wins, small wins, break-even trades, and very small losses. The 1%, remember the 1%. And if you understand this, if this is your takeaway from tonight, you just opened the door to forever consistency. Literally. You can have the most dumbest structure and the dumbest system out there. But if you respect the risk to reward and if you respect your size, you can be wrong 80% of the time, but on your 20% of the trades, if you get them right, you're going to grow your account and make money. Imagine if you would have an average, a batting average, you would have like a win ratio of 75 to 85%. That's crazy. Okay. So before we go in here, I do have some charts for you, like I promised. Okay. So this is a chart of the S&P. Now I'm going to share with you one thing that if you write it down, you're going to make a lot of money with. Nothing in the market. There's not a lot of money to be made when you're going to find wide range bars. Okay, like these right here, like this. These are wide range bars. The biggest actions into the market are going to come from these narrow bars. Okay, and I think that we're going to get a really big, explosive, massive move here. And there are two things that are going to happen. Okay, number one, we're either going to break out and then we're going to be heading to the all-time high, right? This is the all-time high right here, the 6160-ish area. And we're going to break out. And I don't think that we're going to have any problems with the all-time high. I think we're just going to extend higher. And a most recent, I would say like the most achievable targets, we're going to be seeing 6,300. That's going to be the target for the summer. Okay. So mark this out, mark it out in your planner or on a piece of paper. You heard it here first. This is where we're going to go. Okay. If the market is going to break out, if the market is going to break out, if the S&P is going to break out, okay, that's where we're going to go. Now, keep in mind that we have a power structure trend. We have a beautiful power trend here, and then the trade slowed down a little bit, and we started with these really tiny, narrow candles, okay? Very narrow candles. Now, the biggest moves are coming from these really narrow candles. So what we can expect here, like I said, either a breakout and extend higher, or a pullback, and I would see a pullback exactly. Let me just trace it into this area right here. If we get a pullback, okay. So if you look back here, you will see that this is a massive confluence zone. So this whole entire area around 5,800 has been coiling around. Okay, so we had tap 1, tap 2 in here, tap 3. So this was support. Now this support becomes resistance. Now this resistance becomes again support, right? And the support is rising. So you can see here at that, the price action picked up the pace and is trading above the 20 SMA. Pretty cool. Now, as you can see, guys, I'm using very simple indicators, right? I'm using, and by the way, ignore this. This is a William percent hour. It's not for day trading, but I'm using simple volume. Why do I use simple volume? Because it shows me the market participation. Look at the market participation here. It has unusual volume. So when you're having an unusual volume pickup, it either means that number one, the price action is going to reverse and adds another layer to the rotation confirmation. Okay, so we have been long biased since 5,300 with confirmation. Here, we were mega bullish, mega bullish. And in fact, here is where we began tons of swing trades long. In April, towards the end of April, we were mega long. We were long everything. We weren't shorting anything. There's nothing to short. So I think that it's going to be very important. It's going to be a very important decision here. So volume, because it shows you the participation in the market, plus it has some other key secrets into it. And I use 4 moving averages. This is the 50 simple moving average, which I'm only using for higher time frame charts. I'm not using it for day trading. I'm using the 200 simple moving average, which is this red line. I'm using the 20 simple, which is blue. And I'm using the 10 exponential moving average, which is pink. Yeah. Thanks, Dennis. Okay. So when I'm day trading, okay, so let's go back here. Okay. By the way, take a look at this craziness that happened in the FOMC. But when you go back here and when you look at the open at 9:30, this is the effect of 9:30, right? So we had a low here. We had another higher low. And when the market opens, what did the price do? It came to retest the same level right here. And it created a double bottom. And finally rotated here. And it went all the way to 6,000. Now, why did it go to 6,000? Okay, take a look here. Okay, so it should have went higher, and I'm going to tell you that it should have went to 60.40, but it kind of closed like an inside bar. So again, for tomorrow, the price support is still 59.20. The support is 59.20. We have an upper support determined by the low of today's session of 59.60. And then tomorrow, if we want to, I mean, Friday, okay, tomorrow the market is closed. Keep it in mind the futures market is open, and it's open right now. They open at 6 o'clock. The your trading session is going to be closed. I'm not going to be trading tomorrow, obviously. I don't trade on low volume days. And we're looking for a break over 60.20. And if we get the break over 60.20, we could easily go over 60.70 and go push towards the all-time high. And this is if everything is okay. This is and every single time when you're doing your game plan, you have to have option A, option B, bearish or bullish. Obviously here, because because you see the price action is above the MAs, you're going to be bullish biased, 100%. Shorting is not an option, okay? Shorting will be an option if we start breaking 59.20. And if we develop some kind of a setup below that key level, then we will possibly see a continuation into the 200 SMA area, into the 58.50. This is what I see in the market. So I'm here to invite you to a very special course. It is the Power Income Futures course. It is an institutional grade trading system. And this program is for you if you're losing money in the market right now, if you don't have a system, if you don't have a process that eliminates emotions, and if you lack confidence, this course is going to change your mind. And if you want to hop onto our trading room, we have weekly passes, monthly passes. But unfortunately, the course starts Monday and you can't just jump in. But you can check our reviews. But in the core in the trading room, we do have tons of traders that have been with us for some time now, and they have taken the course. And I would say 90% of the traders that are in the trading room are power income traders. So learning how to trade is not inexpensive and can be a good chunk of change. But compared to your losses and the mistakes some traders make, that could be really, really much costly. So what is your account telling you about right now? It's almost a half of the month, and we're going to have a presentation. I think it's going to be next week with our half year analysis. We do forecasts. We did a forecast in January, and we're going to give you guys what we saw in January, and you're going to be shocked. Every single time we do a market forecast, the market does exactly that to the T with the targets. Why? Because it's technical. I just respect the market and the indicators. That's all I do. And I interpret price action. That's all I do. I don't, give my personal bias. Oh, I think that the S&P is going to go to this level. No, it's not a thinking thing. It's more of what you see technical in the market. You saw how I did the projections. Bam, bam, that's it. So that's where it's going. If we break the all-time highs, it's going to 6,300. Period. That's it. Learning how to trade is like learning how to drive. It could be very overwhelming. So if you remember when you first started to drive, right? You have to keep track of your gas, your brakes, mirrors, so you don't crash. But once you got used to it all, you didn't have to worry about one thing, and all you have to worry about is getting to your destination, right? Because everything else becomes second nature, and trading is the same. Like, do you think like now I'm thinking and saying, oh, I got the price action needs to do this. I got to look for market conditions. No, I look at the chart for 2 nanoseconds and I know exactly what's going to happen. Okay. With higher odds. because there are some things and there are some levels that if they break above, they're going to go to a specific spot. And if they don't work out, you're either going to stop out or you have a short in place. Okay. So we have a 90-day Power Income Futures Masterclass that is going to start June 23rd. We do these classes quarterly. And yes, we have had some demand to do them more often. I don't know, maybe we're gonna do it more often, but for now, it's for January 23rd. As far as I'm concerned, we're gonna do one in September. We had a lot of people that wanted to sign up for the course, but we only take a small group of people because we personally work with these group of people because we want to make them successful, and they are successful. So the class starts on June 23rd and it is live. We're voted, by the way, the best in the industry by Benzinga. And this one was voted as the best professional trading program and best trading results based on the course. So you're going to get lifetime. Not only that, the course is live and there's no homework. There's not going to be like, oh, you got to learn this and you got to do that and you got to do the homework, build your own trading plan, build your own system, and then show me some trades. No, we're going to give you everything. So not only the course is going to be live, this time around it's going to be 12 days live. You're going to get lifetime access to the Power Income Futures Trading course live, where we take you from zero to hero, from student to pro trader. You're also going to get the e-manual and the on-demand recordings. The manual, by the way, is over 650 pages. Education, strategies, training plans, and more. You get unlimited live retakes. So every single time we do a live, guess what? You're invited. You're invited because you're not going to retain and you're not going to remember everything, even though you have the recordings, you have the option to watch the recordings and they're yours forever. We're not going to take them away from you ever because we understand that trading is about repetition. Okay. So you get the live retakes. You get the live retakes, but we encourage students to come for these free unlimited retakes every single time. And I promise you that you will have tons of light bulb moments in these classes. We have traders that took them 20 times, literally 20 times. They go like, oh, now I understand why that and that and that makes sense. Okay. Because it's not, I mean, it really didn't sink in for me from the first class that I took. And the more you're into the market, because you're going to be trading with me for 3 months, every single day, you can pick my brain, why to do that. But you will know why I took the trade, where I took it. You'll know why I placed the stop because you learned the exact strategies that I trade. We have a private X feed. You're going to get platform layouts. You're going to get student personal support. You're going to get a risk sheet, so you're in control of your trades. That is a position sizing sheet. I'm just going to show you very quickly what I mean. Let's see. Yeah, it's in here. So this is a risk management sheet. For example, this is a risk calculator. You're going to have access to this. So let's say here, okay, let me just do this. Okay. Okay, so let's say here your capital is, let's say $100,000. Okay. And then you're going to look here and say, my risk is 1%. You should never, ever, ever go as a day trader to 2%, 3%, 4%, or 5%. I should actually delete these. All right. And then your risk per trade, you're going to choose 1%. So that's going to be $1,000. Is that complicated, guys? It's not complicated. And then, for example, if you have, let's say if you have a 10-point stop in the S&P, you're going to know that with this size, you could take 2 full-size contracts, okay? With the same size, you could take, let's say, 16 micros. Don't take 16 or 20 micros, okay? Don't take them if you don't have to because you're going to pay a lot of commissions, okay? You're going to pay a lot of commissions. So this course, literally everything that you're offering is about $36,000, if not even more. And now it's $59.99. It's literally $16 a day. How many times you go to the grocery store every single day or convenience store or get gas or get whatever, get lottery tickets, and you spend more than $16 a day. How about spending $16 a day to become the most fabulous, profitable trader ever? And this is the link. Let me see if I can put it out here for you guys. If you want to log in, this is the power course. And by the way, we only have 4 spots left. Only 4. That's it. So it's first come, first serve. And I'm serious. Then you'll have to get on a waiting list. And the course is going to be in September. And I may take September off for a month or 2 months because I may travel to Europe. So, like I said, I did my money in gold. I did a fabulous return on it. So this is the Power Income Futures 90-day masterclass. Unlock your path to profitability, trading in just 90 days. And you know why 90 days? Because this is based on the powerful 90-day rules. Our course is designed to help you develop healthy trading habits that stick. Just 21 days, you'll build a solid trading routine. And by day 90, trading profitability will become permanent lifestyle shift. And I'm not kidding. I'm not kidding. If you want to get into the course, you just click this link right here. And here you have an explanation of what we do. The course starts on June 23rd. This is the schedule right here and the timing. This time around, we have a lot of students from Europe that have signed up, and they have requested to have an earlier start date to the earlier start hour to the course. And of course, you're going to be in the trading room for 90 days till September. And remember what I said here? By September, at the end of the 90 days, you will become the trading profitability will become a permanent lifestyle shift. And if you're interested, these are some of the things that you're going to learn. Intro to futures, what contract to trade. I get so many questions like, what contract are we trading right now? Are we trading the September contract? Are we still trading the June contract? I will teach you what contract to choose and not what somebody's telling you to trade. We're going to talk about expiration. We're going to talk about trading hours. We're going to talk algorithmic trading. We're going to talk about the most powerful candlestick formations to deliver the best results for your patterns. We're going to talk about market cycles, when you need to be a buyer, when you need to be on the selling side, when you need to be sitting on your hands. We're going to talk about market trends and how to trade these trends. We're going to talk about trading timeframes. These are specific to TradeOutLoud. You're not going to find them anywhere on the internet. The execution timeframes, analytical, multi-timeframe fusion. We're going to talk about the anatomy of the trade, calculating with laser sharp precision, how to enter trades, where to place the stops and how to place them, calculating targets, calculating risk, etc. Market tempo, proprietary day trading, reactionary times, trigger times. Again, all these are proprietary to TradeOutLoud. You're not going to find them anywhere in the world. We're going to teach you 10 best trading strategies, not one, even though you just need one to be successful. Amongst these 10, you're going to have one that is ultra powerful. You're going to have technical analysis. You won't need another book, another course ever again in your life. You're going to get money and risk management course with position sizing, risk tolerance, money management, risk, reward, etc. So everything is deciphered for you. So you finally understand and make sense of how you really need to trade. We have a chapter on trading psychology. This is on demand. We have a chapter on trading and how to create your trading journal. This is again on demand class. You're going to get an trading action plan. Again, we're going to discuss this live in application. You're going to get my trading plan, your first step towards successful trading. You're going to get the power of levels. This is how you're going to learn how to identify the most powerful trends every single day by tracing institutional trading levels. And this is for the last 2 sessions of the course, and finally putting everything together where we do the power levels, tracing the power levels and putting everything together here. So again, if you're interested in the master, the essential skills and strategies of the futures markets, this is literally only $59.99. And by the way, if you want to dive into swing trading, okay, if you want to dive into swing trading, we have a special value for you. If you go on our website, by the way, if you go here under education and under future swing trading, you're going to see that this course is 4,997. If you buy the day trading course, you're actually going to get this swing trading course on demand for only 1,997 versus 4,997. Okay. So if you're interested in both courses, a power income course and wealth generator, you click this link. So there are two links on this page, one just for the power income, the 90-day masterclass, and one for the masterclass, the 90-day masterclass, plus the on-demand power wealth generator. A lot of the traders are opting for this version because you will learn how to unleash the power of, and I'm going to show you right now. We're going to go through some charts. Okay, just give me 1 second here. This is to move the contract. Okay. Okay, here it is. All right. So remember, we got into this trade over here. Okay. This is where we got into the trade on the breakout. This was where our stop is. This is where our stop is under the base. This is where our first target was. Target achieved. We are almost 1R. So we locked in 1R of the trade. Not only that, we locked in 1R of the trade, but we have achieved two more targets. This is 37 right here. And if you look at a monthly chart, let me show you, we're trying to get it into the $40 area, which is not that far. So you can take advantage of these mega plays. So this is one of them. GC, which is gold. This one, we have been riding it like bandits. Let me go to the daily right here. Okay, so this is what, by the way, this is a first breakout right here. And we have been writing this since here. Okay, so December and last year as well, but just showing you some recent entries here. This is where we were. We got some here. We got some here. Okay, we got some here. And now you understand why I want to take some time off in September. Okay, so again, this is the first expected target after the breakout, 3,600. Okay. So we're all going to Bora Bora. I understand if if it hits 3,600. So you can take advantage of these moves right here. For example, platinum. Okay, oops, it's this other contract. Okay, I was telling you guys that you need to have patience, right? Look at platinum here, by the way. Look at platinum. This base. Look at the cursor and look below here. Do you guys see April 2015? Finally breaking out. Multi-year, 10 years. You had to wait 10 years for this trade to happen. But obviously we have plenty to trade, so you don't have to wait 10 years to trade this. Okay. All right. So if you guys want to sign up, again, once again, the link is in here and I'm really ready to take some questions. All right. Okay, can you take the course now? You have a full-time job. Can you do the recordings? Absolutely. We send the recordings at the end of each day. So yes, you will receive it. Okay. Can you sign up now and attend the course in September? Yes, you can. All right. Do I trade options? I do not trade options. What indicators I use? I answered that question. I don't manage accounts. I used to do it a long time ago. I just don't do it anymore. I just manage my own accounts right now. Sorry. Do you need more capital for swing trading? Not necessarily because commodities are cheaper than indices. The course starts Monday. That is Monday, June 23rd, I believe. Yeah, June 23rd. Let me just check it out. Yeah, June 23rd. And we have 3 days each week. We have June 23rd through the 25th, June 30th, July 2nd, July 7th, July 9th, July 14th to July 16th. Yes, the 3 months are included. After the 3 months, when the 3 months expire, then you have the option. Yes, of course, you can continue in the trading room. You have the option to join us. We have yearly memberships and monthly memberships. No, I will not be trading on Friday. Uh, You could no, it's too late to send a check if you want to send a check, it's too late because we may not get it till June and it needs to clear out till Monday, June 23rd. But you could do a bank transfer, so contact my team at info at tradeoutloud.com and they're going to give you wiring instructions. All right, I believe my time is up. Thanks so much. If you have any other questions, let me know. And you can email all your questions to info at tradeoutloud.com. More than happy to answer your questions about this class or about the upcoming course. So thanks so much for joining, everybody. I really appreciate your time. I will see you guys on Monday in the market, and I'll see you in the course. Thanks so much. Okay, thank you. Okay. Awesome. All right. So we have two people that have already joined right now. Awesome. Uh, then two, I think we have two seats left. Okay. I don't know, Vita. I really don't know. Okay. Thanks so much, everybody. See you guys next time.